Welcome back. I'm Ibrahim Sani and you're watching Markets Today. This is the iron ore week in Singapore. Higher iron ore prices are going to prompt speculation that previously closed mines in China will re-enter the market very, very soon. Now, the question remains on how feasible it is to restart the market and how much production could be brought on. Here to discuss this story even further is Rohan Kendall, the principal analyst of iron ore and steel costs. He's, of course, from the global energy and metals and iron ore consulting company called Wood Mackenzie. Rohan is here to tell us more on the possibility of Chinese iron ore mines being restarted.
High iron ore prices have prompted speculation that previously closed Chinese mines will re-enter the market. But how feasible is it for Chinese mines to restart, and how much production could be brought on? Now, we think an iron ore price of $80 a tonne will make it economically viable for about half of China's closed capacity, or around 100 million tonnes, to come back into the market. This is based on our estimate of operating costs, restart costs of $15 a tonne, and a profit margin at $5 a tonne. But the decision to restart is more complex than just looking at costs. Firstly, difficulty in obtaining finance will keep most mines shut even if prices stay high. Many closed mines are heavily indebted and will struggle to raise funds to allow a restart. Second, environmental and safety concerns. Closed mines will need to reapply for mining licenses, and high dust emissions may prevent them being issued. This is particularly true in eastern China, where smog is a major problem. Mine safety also remains an issue and will be taken into account when licenses are applied for. But most importantly, we think current prices are unsustainable. The fact that many closed Chinese mines could now be profitable indicates to us that iron ore prices will fall. Reinforcing our view is growing seaborne supply from recently completed projects such as S11D and Roy Hill, and increased output from Rio Tinto and BHP Billiton this year. We're also seeing a rise in exports from countries such as Iran and India, and at the same time we see no growth in Chinese iron ore demand. For the market to balance, iron ore prices need to fall and displace Chinese production and high-cost seaborne exporters, rather than remain high and encourage restarts. So overall, we expect prices to fall towards US $50 a tonne by the end of the year, and at that level, no closed Chinese mines will consider reopening.
And of course, when we talk about mining companies coming to the picture, and Australia is, of course, the core market that we have to focus on. A quick look at the Australian markets. Right now, BHP fell 5% and Rio Tinto was down more than 2%, as BHP cautioned that a significant amount of iron ore supply will hit the market in the next 2 to 3 years, weighing on prices. We just heard from Rohan from Wood Mackenzie saying that current prices are unsustainable. I don't know whether this will go on even further. The World Bank, of course, delivered a similar warning only hours before that. Earlier this week, the big investment bank, Goldman Sachs, also noted a weakening Chinese steel market, for instance, could cause commodity prices to fall again, which did push title little to help the miners' cause. Coal and iron ore account for half of BHP's operating earnings, causing the bank to cut the miners' rating while it kept Rio Tinto at neutral. ANZ analysts note that the data showing another surge in China's industrial profits helped improve investor sentiment after an extended period of what they call bearishness. And in this light, we're switching our gears. Wood Mackenzie also spoke on a little bit on the global steel outlook, where for this year, Wood Mackenzie expect the steel industry to hit the ground running. Much of this is because of demand and production for steel in rising multiple markets, including that of China, Europe, and the USA. Wood Mackenzie continues on saying that the global finished steel demand is expected to grow 2.2% to 1.52 billion tons, and Brazil and Russia are, of course, past their worst, and we would see manufacturing remains strong in Europe. That's it from me. What do you think of this episode of Markets Today? Tell us what you think on Facebook, Twitter, and Instagram at 501 AWANI. Don't forget to download our app on the Google Play and the Apple App Store. I'm Ibrahim Sani. Thanks for watching.